Hi, and welcome back to Stock Talk. This is Joe Rabil with Rabil Stock Research. In today's lesson, what I want to do is go into the S&P and actually give a little bit of analysis during the lesson, but I want to explain the 1, 2, 3 reversal pattern and how it can be confirmed on the higher time frame. Let's go ahead and get into the agenda. So I want to give you an example of a 1, 2, 3 reversal that actually just recently happened on an hourly chart, and how it was confirmed on the daily. But the most important thing we want to do is understand the difference between the trend line break and even the two in this process. We are in what I'd call a transitional phase. So I want to explain that and what it means. And then once we finish that, we're going to go through the individual symbol requests that came through. Let's go ahead and get into this lesson now. Okay, I've got my 4 time frames on the SPY up, and monthly, weekly, daily, and hourly. And what I want to do is talk about the hourly and the daily right now first, and then explain what I'm seeing on the weekly and the monthly. And in the process of doing that, I think I'm going to give you a better idea of what is going on from a 1, 2, 3 standpoint and what we should be looking for. Notice how we had this trend line in place that was tested a number of times, and the way I draw the trend line is I look for a low in the move. So once we make a lower low, I'm going to go back to the prior peak, and that's going to be my anchor point for the trend line, and then I'll use the next level above so that I'm not drawing through prices, and I'll connect those two to form a trend line. And if you notice, we failed at it again here, and then it just recently, just in March, we broke the trend line. I've marked that as 1. Now, a lot of people look at trend line breaks as being really, really valuable. And I mean, I'm not saying they're not important. They are important, but they are only 1 in the process of a 1, 2, 3. We're not necessarily changing the trend by breaking the trend lines. And when we get to the longer term pattern, this will make even more sense. So we make this move to the upside, and then we come back and test. Now, that's the 2. So we break a trend line and then test it in form of, sometimes it comes back in the form of a third of a retracement. Sometimes it'll be all the way down to the low, and sometimes it'll even undercut the low a little bit. Any one of those could be considered a 2 in a reversal of the trend. In this case, it was pretty strong because it only retraced back to the moving average environment, and it was only about a third of the move to the upside in terms of how much it retraced. And then recently, and in fact, when I'm doing this video, it actually is crossing back above the 3. So if we got our 1, 2, 3 now, we have a true reversal on this time frame, or at least what I would call presumptive evidence that we have a trend change. And the reason I say that is that typically what we want to see is after the trend line break, we want to see a couple of higher highs and a couple of higher lows. I don't typically count the higher bottom that takes place prior to the trend line break as a part of the process of shifting the trend. So I really want to see a little bit more confirmation after the trend line break. So, but I've got this approach here, which is telling me that we're creating a 1, 2, 3 on this time frame. Why is that so important? And the reason is that in the process of doing that, we are breaking above the 18-day. So I will see this happen almost always when I'm noticing a 1, 2, 3 on one time frame. Just to double check, I will go to the higher time frame and make sure that I'm crossing above the 18 on the next higher time frame. So if 1, 2, 3 on an hourly chart should coincide with a trend with an 18 MA break on the daily chart. Now, if we go to the higher time frames, look at what's going on. We have the same trend. It almost looks identical the way this is set up. They have 3 touches on the trend line going down, 1, 2, 3 touches. Then we broke it. That's the 1. Then we come back and test. We did a 50% retracement in this case. So if you take that low to that high, we retraced about 50% of the move, and that's the 2 so far. Now, I mean, it's possible we could keep drifting our way down. But what's important to me is that I've marked off 2 levels, this low and this high. And until we break either above the 3 and get back through this horizontal line to the upside or break through this low to the downside, we are in a transitional phase in this index. That means we're not in an uptrend anymore. And we're not in a downtrend, I should say we're not in a downtrend anymore because we broke this trend line. But we're also not in an uptrend until we turn this back to the upside and complete the 3, complete the process of a trend change. So I want you to keep an eye on this on all your patterns. If you notice the 3 coming back up through this prior high, and the reason why I believe this high is so important, it'll coincide with getting back above the 18-month line. Very, very important line in my long-term work. So this long-term trend is starting to roll over, but it's caught between the 18 and the 40. Well, that's pretty much in agreement with what I'm seeing here. We're in a transitional phase. We're in a period of inconclusion, essentially. We don't know. We could be changing the trend, or we could be just pausing in the downtrend. So don't get too caught up in trying to make a big market call. If we can get through the 3, then I think we get a lot more confirmation in what's taking place. Now, from a shorter term standpoint, you could find something that's showing a lot more strength on a pullback here and then look to play it off the daily chart for a trade. But the way I'm looking at this is we've got a reversal in place potentially, but it isn't confirmed yet. So hopefully this will help you when you're starting to evaluate these 1, 2, 3s and how they work in conjunction with the higher time frame. Let's go ahead and get into the analysis now. Just briefly, my services can be found at rabilstockresearch.com. If you take the individual package, there's about 2 to 3 reports each week, plus a special video for that package. And in addition to that, you will automatically be enrolled in the trading course. So take a look on the services page if you have an interest. Let's go ahead and get into the analysis now. Okay, so I've got a great list of symbols. In fact, a number of indices to talk about that I think will be pretty enlightening. So I'm excited about that part. But I do want to follow up on the SPY because I just did a lesson on the SPY, and I did it on Tuesday, and I kind of did this on purpose, was hoping this would happen because I think this is so important for you to understand that I want to take a few extra minutes and explain where we are right now after 2 days worth of price action. Because if you notice, this is where we were on the hourly chart. We had completed the 1, 2, 3 to the upside. Now, as I mentioned, I like to see another higher bottom and another higher high after the trend line break to kind of confirm the trend. But we did get back above the 18 on the daily chart. Now, what's interesting to me is that we've already turned back into transition. Do you see how this broke the trend line? We draw on our new trend line and we're already back in transition on this time frame. I think one other thing that I would keep in mind is that the fact that this moved up and completed the 1, 2, 3 is one thing. And a lot of reasons why I like to see a little bit more confirmation is we never got the ADX back above 25. I mean, you see how this only got up to 25, 24? So we never really had confirmation in my mind that the trend was really kicking into gear to the upside, and now we're already breaking the trend line coming back up. So this is now in transition. I drew in this horizontal line here because if we come back up through that, then I'm going to alter this trend line. This trend line has a different slope at that point because we have a new anchor. Okay, so I want you to start thinking this way in each time frame. If we look at it, look at what happened to the daily. We had the 1, 2, 3 to the downside that was completed here on this drop. If we make another lower high and another lower low, we've kind of confirmed that this trend has reversed back down and increases the likelihood we're coming all the way down to this low on the weekly. But look at what we did. We broke the trend line. And now if we get a little bit more follow through, we have a 2 in place. And if we do that, we come back up through this high. Now we've completed a 1, 2, 3, and that increases the likelihood that we're going to test this line. Okay, so use the smaller time frames to help you figure out what's going on. But if you look at what's taking place, it's hard to have a strong conviction right now. I've been saying this for weeks. Not only on the YouTube stuff and on this show, but also to my subscribers. It's just we don't have a high conviction level in all the time frames at this point. And a lot of that has to do with the fact that we're sitting between the 18-month and the 40-month. We're just channeling between these two lines. And again, when you look at the weekly, it is as long as we're below these two horizontal lines, we're in transition on the weekly chart. These are driving what's taking place up here. The smaller time frames are going to have a lot more whippy reversals and stuff like that as long as this is in a transitional phase. So keep that in mind. You get whipped around on the smaller time frames when the higher time frames are in transition. Okay. All right, let's move on. I want to talk about the Nasdaq Composite, and there are some differences. But in the near term, it's a little bit more similar in terms of the weekly, in terms of what's important, because we need to get through this line here to complete a 1, 2, 3. We've got the trend line break. We've tested. Now, if we can come back up through this peak here, then we've completed a weekly 1, 2, 3. It looks a little stronger right now than the S&P because you're holding a rising 18-week for the first time since the decline. Now, MACD is straddling. The MACD line is above zero. The signal line is below. Right? So to me, this is not a confirmed signal that we've reversed back up. A lot of times this will happen and then we can reverse right back down. So don't get too excited about the fact anytime the MACD just barely crosses above the signal line, above the zero line, it needs a little bit more work, especially when green DI is doing nothing, which this is doing right now. One thing I did want to point out is look at the way this is playing out. You see how ugly a bar this was to finish the day? This is the hourly chart. Look at that. It's the biggest bar we've had in months. Huge red bar. Look at all the red inside the bar in the candle, right? It's a full body red bar. I call these, just enormous, or you can call them an elephant bar, whatever you want to call it. It's a huge bar where everyone kind of in agreement to get out during the last hour. Look at how this happens, though. There's no follow through. We get a massive gap up. I mean, you're just dealing with an environment that is just really, really difficult right now for short-term trading. Okay, there's too many cross currents in the news. You got to be very careful. Now, we had this pullback to the 18-week. We didn't have great momentum behind it, but you could have considered this as a potential trend. A short-term trading play here. Although with all the Fed news and the coming, I'm a little bit more reluctant when I know the Fed's about to announce interest rates because I know there's going to be volatility. I'm not necessarily calling for a reversal, but if this can hold the 18-day, this is probably going to look a little bit better. Still got a really strong resistance zone above, and even if we get through that, we've got another one not that far away. Remember, if we complete a 1, 2, 3, we want to be getting above the 18. So if we cross above this line quickly, we're still going to be below the declining 18-month, and I'm going to want a little bit more confirmation of that 1, 2, 3 reversal in this case. All right. So think about it in those terms. Always use the higher time frame to help confirm using the 18 MA. But this is kind of intriguing what's taking place, especially when you start to look at some of what's going on in tech and SMH. I did a daily 5 this week on that. Okay, let's look at the Nifty 50. I got a request for this on the India markets, and it's just such a great example. We can learn a boatload from looking at this chart. Look at the monthly chart and look at what happened. We made a higher high in price, clear higher high. Look at what MACD did. I mean, this is literally right out of my book and my course, the divergent pinch play, where we make 2 higher lows into a new high, where MACD is actually making a lower peak and it can't get above its signal line. Look at how we got no confirmation in the buyers on this next leg up. And the reason why I'm saying that is if you look at, we made lower high, lower high, lower high, lower high. We never made a higher high, even though price did make a higher high. Green DI never confirmed. And then obviously MACD didn't either. That's a really helpful thing. Now, if you go and look at the weekly, we know we're operating on a divergent pinch. Well, now you can start to look at mini pinch here, mini pinch here. This one's my favorite, this trade right there. We had right below the 18, we had 2 little mini bars taking place. Those are narrow range bars that you should expect expansion to follow. We still had plenty of room to the zero line. So a lot of kind of cool stuff going on in this market. I mean, from a trading standpoint in terms of evaluation. Now, where this stands right now is that we failed at this high. It looks like we want to come down to the next support zone. And let's look at the weekly for that. We do have some support here, just under 17. I would say it's more likely, though, we're probably going to work our way down 16, 16.5, something like that. I think that's where we're headed in this, just based on the way it has played out. So, but be on the lookout when you make a new high in any stock, any market. See if you see this signal, especially when ADX can't get above 25. And you get a divergent pinch, you got to be ready for a move to the downside and a test of support. Okay, let's talk about this. This is the regional bank index. We know we've had a boatload of news on this, and I know there's guys out there thinking, should I go diving in some of these banks that are down, way down and overdone to the downside? Well, and I've talked about this in the past. I do recognize the fact that we're coming into some support. You can see some support coming not that far away. When we get closer to 40 in the KRE, we're going to be closer to support. However, the momentum condition is such that I would lay off. I would not be the first one as this is dropping down. We need proof. I kind of refer to this as being guilty until proven innocent. The trend is bearish until it proves itself otherwise. So even if we get a bounce, it's more of a sellable rally right now, I think, in terms of the momentum condition. Because this is so strong and we're crossing above 25 with a really powerful reading on red, the negative DI, and the same thing on the daily. I think we have to be on the lookout for more continuation to the downside. You know, it's very possible we could get a Super Bowl bounce off of this 40 level, but to me that would be counter trend. It's not something I want to go diving in unless I want to play really short term, and I can't even see that pattern right now. Look at what the hourly is doing. This is a zero line. Let's just zero in on this for a second. This has worked off this oversold condition by working sideways, and the MACD was way down here. Now look at how it's failing at the zero line, or at least it looks like it is. So I would view this as almost like a new sell signal, even though this is really far away from the 18-day. All right, so don't be in a big rush on these. This is not the type of environment, again, to go diving in. I mean, we looked at the indexes. We know we're in a transitional phase for the indexes. This isn't a confirmed downtrend, so and the momentum is confirming. Okay, so now I got a question about Microsoft. I know I did this last week, but this is a different question. So he wanted to evaluate the signal. He wanted me to evaluate the signal on the weekly. Now, I know in the way that I look at things, this was a declining 18-month line, all right? I had a MACD that had worked off the zero line, had worked back to the zero line after being really overbought. So it wouldn't surprise me to see this try and get through the 18-month and maybe work up towards, 290, 300, something like that. So, but the only way I can take this trade is the pullback to the weekly, triggering off the daily chart. That's the only two time frames I can trade. I can't trade monthly, weekly. This is not a long-term buy signal. It's only a short-term one. And I would view short-term, somewhere in the area of 2 to 4 weeks is the typical time frame I trade when I'm looking at a weekly daily in most cases, because I'm using the daily to manage risk. And let me show you how I would do it. So the trigger for me, we didn't make a new low here. So I can't really draw in the downtrend line like I'd like to. I'd like to be able to do that, and I can't really do that. But what I can do is, because I got this little double bottom and a peak here, I'm going to use this trend line going sideways as my trigger for this time frame. Now, if you think about it, I'm getting long right around 260-ish. Let's just call it 260 to keep it a round number. And my stop's going to be somewhere around 245. Okay, so I'm basically risking 15 points. All right. Now, if I'm doing this and let's say I've put that 15 points, I got to figure out how many shares to buy to only risk 1% of my account if I've got a 15-point risk. So you take 1%, and divide it by the 15 points to figure out how many shares, right? So I've got 15 points. Now, when I'm up 15 points, which would be 275, I'm going to take either a quarter or a third of my position off. I'm going to just book a profit, and I'm going to a break even right here. My stop, which was here, I'm raising to here. Okay, so I've taken a small profit. I'm not going to get rich off this, but these will add up over time to make up for some losses that you take. So if you do that, you take the small gain and you do this, you still have the bulk of your position to play if this wants to keep going. If this turns around and comes back down to your entry point, you get stopped out and you take a dinky little win, and that's it. It's over. And you go look for another entry, or at this point it probably won't look all that good if it comes back down through there. This gives you the opportunity to play in this environment. I don't recommend going and doing, 10 of these or 20 of these right now, because again, the market's in transition, but you can take selective trades that have good quality looks like this, really nice zero line reversal, low ADX, and look at how the green stayed above the whole time, even through this low ADX condition. That's usually a pretty good sign that you're going to get some follow through. So you're in a catbird seat. If you take this trade at 260, you take some profits at 275 and you raise your stop to 260, you're at a break even. If this wants to keep going, you can take another target at 290. And then you're out of half the position. You raise your stop to 275 on the balance, and you keep doing that, and it can turn into a pretty decent short-term trade. So that's just how I would handle that. I wanted to follow through on that question. Okay, SLV. We talked about gold last week. Let's look at silver. Silver's not as strong as gold in terms of the way this is played out. We still have this trend line in place. You see how this really hasn't broken the downtrend line? But if we come back up through this, I'm going to be a lot more interested in what's taking place. We're going to get the MACD back above the zero line on the monthly. We'd have a zero line reversal kind of pattern developing. So I want to see a little bit better momentum in what's taking place, but really there's not a whole lot to do until we can get back above this peak up here at 22.5. If we can do that, then you got to start taking this a lot more seriously. And I actually think you start taking the gold move a lot more seriously if silver can confirm. It's very rare for gold to go up without silver. Okay, at least substantially, I'll say. All right, let's look at PDD. Now, this was brought up just to let you know. I mean, this was asked. I wasn't able to cover it when it was asked. So this was pulling back to a rising 18-week with a rising 40. Not bad. However, if you look at the way this played out, you see this serious overrun on the daily chart. Let's zero in for a second. We had big overrun here. All right, we're still interested because this is a low ADX condition, but you see how these lines are above? We know it's very volatile. This is a volatile pullback. It's not ideal. So, but one thing I want to say is when we get in a low ADX condition, now we have to cross above resistance. We don't look for a reversal signal in the form of a higher bottom or a pinch play or anything like that, or a crossover. We have to kind of break a trend line of resistance. And so I would say, if you wanted to be aggressive, you could draw it slightly downward, but we never took it out. And no matter how you look at this, we never took out a trend line, a low ADX trend line. So there was no signal. Now look at what happened. If we look at this, we have the 1 is here, 2 is here, and then 3 is breaking here. Now we have a 3 to the downside. Now, how do I know that that's the 1, 2, 3? Because there's a lot of noise on here. Well, look at what happened. We just broke the 18-week. I know that's the correct 1, 2, 3 sequence because this is the true break of the 18-week line. So keep these things in mind when you're looking at the 18-week and looking at the daily and trying to figure out where the reversals are and everything. I can see the 1, 2, 3s a lot more clearly when I'm just focusing in. I don't have to be a genius, all right? I'm going to use the higher time frame to help me out. Okay, let's look at CDNS. I want to look at a positive trend here every now and again. Look at the breakout that's taken place. This is really impressive what this is doing. Now, it's overbought, and I want to see a higher bottom form. This is going a long way without a pullback, but look at the confirmation on a momentum basis. Look at the confirmation on a momentum basis. We got a nice base on the monthly. We held the 18-month the whole time. We got a rising 18 and a rising 40. I mean, I don't see anything wrong with with this. Now, what I'll say is that we've got this horizontal line in here. It's kind of a critical area because if we come knifing down through that, then I got to start to think that this is going to turn into a range again. It's a failed breakout. We don't really have confirmation because we need a higher bottom after that long of a run. I want to see some kind of a higher low form. We should get that. This is pretty extended on the daily chart. All right, let's go and look at INFY in India. Look at this failure at the 18-month line, right? Pinch play, right? And then we have this move to the upside that had no strength, and it was really a double top at the 0 line, and now we're rolling back down. So we're testing these lows. It does look like it wants to break that, actually, but nothing to do here right now. It does look like a topping pattern. You could look for a rally on the daily chart as a potential buy signal. Okay, let's look at PANW. Really strong move to the upside, but look at what's going on here. We got a little MACD divergence taking place. Wouldn't be surprised if we get some kind of little pullback right now. Support's probably right around 175 on a pullback. We want to see how this handles any kind of a dip. Again, it's the same concept as CDNS. If this pulls back the right way, this is going to look really attractive. All right, so keep an eye on these stocks that are holding up like this. You've got to respect this type of pattern. Thanks for watching the show. My contact information is listed. If you have any stock requests, send them to stocktalk@stockcharts.com. Have a great week, and we'll see you next time.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.